Fed trumps everything, right? That's the crux of their big note today. On course for the third best year since '90 is Wall Street. Fed trumps all. They're looking for an overshoot. They're looking for an overshoot in credit and equity prices in the coming months.
So I think
makes sense. I mean,
yeah, I never
feel
really
like you have this
Fed
unabated.
I don't think Fed trumps all. I think earnings are really, really, really important. And I think Joe brings up an interesting point. It would be interesting if they disappointed. I'm more in Jim's camp. I don't think that they will. And when I look out, my first company that reports next week is IBM. All I want from that is for them not to screw up. I'm not looking for a lot of growth. I want reiteration of earnings. But if I look across the portfolio, that's what I want.
So you just underscored the whole thing. Yeah, don't knock me out of the park. Right? You don't even have to knock me out of the park. Just don't upset me so bad that I feel terrible about where we are.
But I'm also not dependent on the Fed to keep the party going. I'm dependent on the companies in the portfolio to just not screw up. And in terms of valuation, I actually think that maybe sometime this quarter, valuation does become more meaningful. I just wrote my quarterly letter to clients, and that's something that I talked about, that at just shy of 17 times earnings, if we don't have big earnings growth, we're going to need something to start to support this market. So I wouldn't be surprised if that conversation starts to come back.
Scott, can I just make a quick comment on valuation? Because there are overpriced portions of the market. There are still wide swaths of the market that are undervalued. Okay, and I picked up some stocks this morning. Nokia, I got stopped out. I'm not going to say stopped out. I had to sell Qualcomm a few weeks ago when that FTC trial verdict came in against them. But you know what? I want more exposure to 5G. I look at Nokia, the balance sheet, the yield, where they are, and it reminds me of Cisco Systems about 6 years ago. The stock had languished for years, and then it was set up for this multi-year high, which has really been a thing of beauty. I think you can see the same thing with Nokia happening. Weiss,
you painted a pretty bullish scenario of how you're viewing the market. Lately, you got PPI a little higher than expected, following a CPI that was a little higher than expected. Inflation ticking higher, stock prices ticking higher. You wake up today and you're more bullish.
I am more bullish because of inflation numbers. So we had a hotter core number than expected today, yet we have a Fed that's basically afraid to misstep again. So they committed, or the market committed for them, to the cut in July. So that's definitely happening. So I've got interest rates coming down. I've got inflation picking up. That's great for the market. It's panacea for the market. So earnings, look, today I sit here as a victim of an earnings disappointment. So
we'll talk about that later.
And we'll talk about that later. So to Joe's point, you can't be so sanguine that you won't get disappointing earnings. Broadly, I don't think you do, but there are definitely landmines out there, and they come in the highly valued or high valuation equities.
What about this notion of what Bank of America says, Joe, about, not the Fed trumping all, because I think, most investors, or the majority at least, I think it's fair to say, feel that way. Right now, the Fed just, cleared the runway for takeoff. The question is, how high do you fly? And it's the overshoot notion. What we talked yesterday about, not necessarily in this feeling of euphoria now, but this blow off top that the Fed clears you to perhaps enter into.
Yes. And
you see that too?
Well, I'm concerned about it because I didn't expect that this was going to be a rate cutting cycle.
Right.
I thought this was going to be one and done. That has completely changed this week from the communication that we're getting. You heard Evans talking about it today as well. So we're now looking at a rate cutting cycle. And Scott, if that's going to happen, yes, you could build that type of momentum and euphoria into the market.
Paul Tudor Jones, the old playbook, right? Don't fight it. Just stay with it. Fed goes on a rate cut cycle. You just don't make it too complicated. You buy stocks.
You can get an S&P multiple 22, 24 times. We've been there before multiple periods. And that
sounds crazy, though, saying that, given where earnings are. I'm not saying it won't happen. Actually, the notion that you're even saying that, to me, underscores exactly the power of Powell.
Actually, it's because of where earnings are. So the way to think of it is cyclical stocks, right, or commodity stocks, you buy them, or a Micron, which is a commodity stock, you buy that when the multiple is the highest because you're buying trough earnings. When the multiple contracts is when you start to sell. So you've got this free pass with the caveat of what you spoke about, Joe, on earnings. I just don't think there are going to be broad major disappointments. There never are. So in terms of all of it, the market adjusts pretty well in advance.